Tax season is fast approaching, meaning that the RRSP deadline is also coming up on March 1st. And if you're a first-time home buyer, you have some money in your RRSP, and you want to see how you can utilize Canada's home buyer plan, keep watching. So keep in mind that the home buyer plan only applies to first-time home buyers. So Canada defines a first-time home buyer as someone that hasn't owned real estate for the last 4 years. This doesn't mean that you've never owned real estate in your life. You could have bought a home 10 years ago, sold it 6 years ago, and you haven't owned property for the last 6 years, and this would apply to you. This plan allows you to borrow up to $35,000 from your RRSP. So if there's two of you, you and your partner, you and your spouse, you and your friend, you and your buddy, and you're looking to buy a home together, you can each borrow up to $35,000 each for a combined total down payment of $70,000. Now there are some tax advantages to doing this as well. As you know, if you're making any form of income in Canada, a certain amount is subject to income tax. And depending on your bracket, if you do contribute to your RRSP on a regular basis, you've probably already seen some of the tax benefits and advantages yourself. So because you are taking out a loan against your RRSP, it does mean that you have to repay that amount that you're borrowing as well. For easy math, let's take $15,000 as an example. So if you borrowed $15,000 from your RRSP, you have 15 years to pay that back, starting the second year after you withdrew that money. And the amount that you're paying back is basically 1/15 of the amount that you borrowed over a 15-year window. So again, for that example, if you borrowed $15,000, you would have 15 years to pay that back, meaning you're paying $1,000 per year starting in the second year after you've borrowed that money. And if you borrowed $30,000, you'd be repaying $2,000 per year for 15 years after borrowing. And if you miss one of your repayments, what the CRA does is they add that $2,000 or that $1,000 to your income tax for that specific year. Now, I know a lot of people do wait until getting closer to the deadline for RRSPs before they contribute a certain amount. So I do want to point out that in order for you to actually withdraw this money from your RRSP, it needs to be in the account for at least 90 days before closing. A common misconception is that that money has to be in your RRSP for 90 days before you can start shopping around, but the reality is, as long as it's been in there for at least 90 days before the closing on the property, you can start shopping around. So this program sounds great and all. You can borrow up to $70,000 for two people on a first-time purchase, but how do we know if it makes sense for you? Let's take a look at a scenario, and let's say his name is John. John makes $50,000 a year. At a 25% tax bracket, that means that John would owe the government $12,500 at the end of the year. Now let's say that John decides he wants to put in $5,000 into his RRSP. This would bring his taxable income from $50,000 down to $45,000. This still means he's at a 25% tax bracket, but because his income is less, he now owes $11,250 instead of $12,500 at the end of the year. Now let's say John decides he wants to put in $8,000 into his RRSP. That's going to bring his taxable income from $50,000 down to $42,000, meaning that the tax payable at the end of the year is $8,400, which is a little over $4,000 in tax savings compared to him making $50,000 with no contributions. Now, the higher your income tax bracket, the higher your tax savings would be as well. So let's say you make about $100,000 and you contribute $18,000 towards your RRSP. That's going to translate into about $6,000 in tax savings for an after-tax amount of almost $12,000. Now, I do recommend speaking with your accountant or tax professional as well, as everybody has different scenarios and different circumstances. Overall, I do think that this program is great for certain people, and I think that it's a great way to tap into up to $70,000 in RRSP money without being taxed for it. So if you have any questions or you want to know a bit more, I'd be happy to chat and give me a shout.